Sounds good. I'm just putting my name on the Zoom because I always forget to do that. I was on Zoom calls for a long time as trombone because my son takes trombone lessons, and so I was showing up as trombone here for a long time. But
Yeah, it's especially during kind of the COVID era. I think those popped up quite frequently. You'd had different names, and then also you'd have some interesting things happening in the background, right? When we were all
yes,
kind of adjusting to that new
yeah, we won't
lifestyle.
let that
So
happen.
absolutely, yeah, no, good,
Yeah.
good, good.
Well, hi everyone. I'm Andy Harwood. I'm co-owner of the Vaz+Harwood team. I'm here along with Nora Harry. Nora is our director of operations on the Vaz+Harwood team. And we are very excited to have Mr. Zach Prim from Business by Design um, with us today to talk about taxes, tax planning, how to keep out of trouble with taxes for realtors, and just a little bit of a backstory. When Sherilyn and Sherilyn's my partner and our CEO, when we were getting the Vaz+Harwood team started, we had a couple of tax preparers here and there, and we just never were really getting good help. This is a big plug for Business by Design, by the way. Shameless plug.
We'll take it.
You should take it. And it was just, I just always felt like we were, in limbo somehow. And then one of the realtors in our office at the time said, "Oh my gosh, you have got to talk to these folks. Your life will be changed." And I can truly say, my life has changed. I never have to worry about it. I just have to make the money and pay it. They really are wonderful. Um, so Zach, I hope that's a good introduction.
It is. I will take any kind of compliments like that. Rain them down on us. We love to hear that. So,
Yeah,
no, I think Andy, when did you come on? Was that 20, late 19,
I think it was
20-ish or
like
so? So
2018 or 19.
yeah, so that sounds
Honestly,
about right. You've been here
honestly,
for a while now, so
yeah, things were a mess. And between you and
yeah.
Paul Miller, I mean, not as bad as you've seen, right? Like we weren't
Yeah,
that,
yeah. No, we've always seen worse. That's what I tell all my clients, right?
but
No,
just
we had the opportunity to work with you and Caroline, and it was, I wouldn't call it really a mess. It was just more or less an opportunity for an education, right? And I think that's a lot of what we tend to do here is kind of help open people's eyes with the fact that you're not really stuck with your tax scenario, right? And I think that a lot of people tend to feel like they're in this mire, that there's some kind of black cloud that's kind of hanging around them when it comes to their taxes. And I think a lot of that just comes down to having an open dialogue and being transparent with your clients and saying, hey, you're not just stuck in this certain situation. There's a matter of planning and tax strategy that you can implement throughout a given year to really impact what you finally do. So I've worked here at Business by Design for, I think it's about 10 years now. And I worked with Paul Miller, the owner of the company, basically the whole time. Actually, he hired me off the front desk at a Lifetime when I was coming fresh out of college. So I
oh, no
moved basically
kidding.
from there. Yeah. I was opening up the front desk at a Lifetime at 5 a.m, and he said he liked me. So
Oh
I
my
told him I don't know
God.
anything about tax. I don't know anything about business, but you're going to give me a job. It's better than getting up at 4 a.m. and trying to open up this place. So that's how I started here. Started kind of moving my way up through like payroll, through QuickBooks, ultimately now into this advisory role here. I've been probably about 5 or 6 years in advisory. So it's funny, Paul Miller actually started the company because of something that Andy's really kind of notated, is that you feel sometimes like you're lost, right? And there's not necessarily a good answer. Paul had gone around to different accounting firms, very similar to what Andy had done, and he didn't feel like he was getting like a very good answer, right? Or everything was potentially a different or chopped answer, or there's little bits of information here and there, but there
Kind
was
of,
never really a
yeah,
cohesive plan, right? There
yeah,
was never really a true, here, paint the picture of how your taxes are going to go.
yeah.
And I
Help me
think
understand this, and then give me a list of what I need to do.
exactly right. And a lot of it is understanding the bigger picture. And that can be fairly daunting at times, just because taxes are not uncomplicated, right? They're fairly busy with a lot of information that you have to know. Unless you wake up in the morning, and I don't know too many people who want to do this and want to be a tax professional and go learn tax law, you're really going to have to go out and try to find somebody who can step in and help fill that role and guide you. And again, I think a lot of what Paul's built here and kind of the culture at Business by Design is focusing on not really just telling you what to do, but also helping you understand why you make those decisions. Because again, we're not the entrepreneurs, right? We're not the ones running your business, but we're the ones that are going to help you kind of figure out, what your options are at your disposal, what levers you can pull throughout, your tax planning, what strategies you can implement to ultimately change that tax picture at the end of the day. Because I think, and this is something that I come across quite frequently, is the accounting industry is changing, and it has been for the last 5 or 10 years. To not only is it's not just now, hey, bring me your stuff in March or April, drop it off, have a quick conversation, and maybe in 3 to 4 weeks you'll hear back from me, and you're hoping that the number is not as bad as you think it's going to be while you're sitting in an anxious stupor for however many months waiting to hear back from your account, right? It's just a very kind of what I would consider almost like an outdated model of how you would do taxes. I think it's more along the lines, and I don't really like utilizing the term proactive, but maybe even taking more of a hands-on approach to where you are building a model and you're executing throughout that model and paying attention to it throughout the course of the year, that you're impacting what your taxes are going to be when you actually do file. Because in all honesty, just filing the taxes is pretty, I'm not going to call it easy. It's not, because putting together tax returns is a very difficult process. But if you're just focused on getting that task completed, you're not going to have a very good result, right? It
And
just requires more conversation.
that's exactly what I used to do. I used to get my stuff together, bring it over to the tax guy, and then just kind of sweat it out while I waited for a phone call. And that was it. This all happened
Yep.
between February and April, or maybe March and April.
Yeah. And I think sweating it out is probably the best way to put it. It's just to say, like, yeah, I'm completely stressed out. Like I said, I think there is this black cloud and the mystery that surrounds people with their taxes. And it's completely understandable, because there's not really a whole lot of dialogue in front of that to let you know, hey, this is what you can expect towards the end of the year. It's usually after the fact, and you're just like, man, I hope I saved up enough. Or worse yet, you get the bill and you're like, I don't have that money. Do I need to go on a payment plan? What's the deal? And that's one of those things, is that is usually potentially leads into just happening over and over, right? If that's happening 1 year, you're potentially prolonging this into the next year. Because if I say, like, hey, I'm behind on my 2022 taxes, I'm going to utilize my 2023 revenue to start paying off my back taxes. Well, now I'm already behind the 8 ball in the next year, right? And taxes are not going away, right? I'm sure I've talked to a couple of people who think taxation is theft and it's unconstitutional. Hey, I'm all for it. I'm with you. But you're going to have to talk to your legislators and have a bigger conversation than that to try to
Let's
change how your taxes go into play there.
Zach, let's you and I start holding our breath right now, and then
Yeah,
we'll just,
exactly.
you know,
It'll be a while.
What did William Shakespeare say? The two things that are for certain are death and taxes.
Taxes, exactly right. Yep. And that's very true. Each administration comes in and thinks they have a different plan that's going to simplify it or make it less complicated. But in my experience, that doesn't seem to be the truth. So
And actually, this is as far as I want to delve into politics, but as a
I'm with you
business,
on that.
oh, okay. But as a business, I worry less about like what like you have to take what is happening right now, right?
Yes,
You
absolutely. And
have
that's a
you just
really,
right?
yeah.
You
And
just have to
yep.
take what's
And
happening right now, whether it's kind of pro your situation or not pro your situation. You need somebody who will keep up with it, and you just have to work with the sandbox that you've got right now.
yeah, and I think, and that's a good point of kind of tailoring your needs to your specific situation, right? Because you're in real estate. I've got maybe 30, 40% clients here that are somewhat involved in the real estate market,
Yep.
whether that be investing, if it's going to be in the realtor space. Again, there's quite a few different things that are at play there. So we really want to make sure that it's almost kind of like getting fitted for a suit, right? If you go into the store, you grab something off the rack, well, it's not going to fit the best, and you're probably not going to be the sharpest one at the ball or whatever it is, right? That's
Yeah.
really where we spend the time kind of going through and focusing. Hey, what are the different items that are actually going to pertain to you that may not pertain to somebody else? And that's one of the things that I think I've noticed kind of just here in the accounting industry, is that there's a fair amount of cookie cutterness. I don't know if that's an actual term, but if just a matter of like, hey, you have an S corporation, here we set a wage, boom, out the door. There's just more to it, right? Because
Yeah.
you have different conversations about having a home office. If you've got kids, you could potentially pay your children. You may want to do retirement. Some people don't want to do retirement. I think that's one of the biggest conversations around people, is that certain people may want to go invest in a property, a commercial property, or residential real estate, an Airbnb, versus just putting money into a 401k. And I think having those options at your disposal is very important.
Yeah, on that, it made me think of something because I actually did that myself, where we were, you're always incentivized to do big retirement contributions,
Yep,
but sometimes that might not be the best move right now. And I needed to
absolutely.
maintain more liquidity, and it was worth me paying more to, you know, just to
To
maintain
have
more
more cash on hand.
liquidity, right?
Yep,
So
absolutely. And
these
that's
not cookie cutter
no,
situations.
no. And that's a conversation we have all the time I feel like in the accounting industry, there is just kind of like, yep, put it in retirement. It's a great tool, right? And it can be a very easy fix to help remedy some of the tax. You got to have the cash flow for it, and it's got to be really fitted to your purpose. Because if I'm like, hey, I want to go buy 2 investment properties next year, well, I probably am not going to put away a max contribution into a retirement account unless I have the cash on hand, right? And that just depends on each scenario. And I think another aspect, kind of akin to what we're discussing, is having somebody that looks out for you, right? Or somebody that's bringing an idea to you. Because I've had clients that come to us, or prospects that will come to our office and they'll say, well, I feel like my accountant's never bringing up these conversations or never having these topics. Or I'm always the one, like, I heard something on the news and I bring that up. And I think, Andy, you were with us when we were going through COVID and the PPP loans and
Oh
everything
my
that was
goodness.
changing with the PTE stuff. I mean, qualified business income deduction seems like it was changing on the fly. I mean, these were all things that we were learning and trying to get out to our clients as quickly as we could, really consume the information. And I think
Not
that's
not
where,
only not only that, but we had a change of politics and the tax laws had just changed.
yep,
And
it
that
was
had
right after 2018 TCJA, everything. We were like scrambling to kind of figure out, hey, what does this mean?
yep.
Qualified business income deduction came
Yeah.
along. A lot of people still don't even know what that is. And I mean, I can't tell you how many people that came into our office in 2020 and 21. And they're like, well, I guess they didn't come into our offices. It
Yeah.
was all via Zoom at that point. But most of the people that would come in, they're like, what's this PPP loan? Or what's this EIDL loan? Or what are the things that are available to you that just nobody was bringing up to them? Because really,
Yeah.
it's not in certain accounting scenarios, it's not really their job to reach out, but it's just a matter of really having somebody kind of have on your side as like a trusted advisor to step in when you have those things that are available to you. Because believe me, I have a good enough ego where I don't want to feel sheepish if you come to me and you're like, oh, I've got this idea. Why haven't you brought this up? We really want to be on the cutting edge of those conversations.
Okay, so one tip here is to um you should have a relationship with your tax consultant where you shouldn't hesitate to bring in an idea.
Yeah, absolutely. And in all honesty, the conversation should be probably happening once or twice a year, and it shouldn't be happening in March or April. I mean, right now I'm dealing with a lot of our clients, established clients are getting their 2022 stuff in. While we're finishing up 22, we're having a conversation about, all right, now we're in 23. How do we start mocking up your tax year, right? Because
Yeah.
it really is just math, right? And that's kind of our job, right? Is to understand the math. And then the rest of our job is to help explain it to you in a fashion so you can understand how do you start attacking that, right? Because it's just a problem solving item where we start going through and say, hey, these are the different things you can implement throughout the course of the year. What would you like to do, right? I'm just here to help display those options.
Hmm.
Zach,
Yeah.
what would you say? I see quite a few new realtors on here, on this Zoom, or people that I
Yeah.
know have gotten into the industry a little bit new. What would you say are probably some of the more common? I know you mentioned that everyone's situation is different and their goals are different. But what would you say are some of the most common things that would be beneficial for realtors when they're just getting into the business to start doing or lining up with their taxes?
One of the first things I would say is probably understanding what your marginal and effective tax rates are. So marginal tax rate of going out and saying, hey, if I'm going to go make an additional $10,000 this year, how much of that do I actually get to keep? Right. And I think that's a big mystery for a lot of people is when they start these businesses and they're going out and, first couple of years, it's probably not as big a deal because you maybe not generating that level of revenue. But as you start generating more revenue, you're like, well, why the heck is my tax bill so high in the second or third year? And that's mostly because there's just a lack of understanding, and nobody's really out there telling anybody that, if you're going to go make a certain level of income, you're going to have potentially a higher tax bracket as you start a tax impact as you start going through these tax brackets. Because if you're at the 10 or 12%, that's not that big of a deal. You got a little bit to state, but as you jump up from 12%, you're all of a sudden into the next bracket, which is 22%, and then you're potentially 7-8% to state. You have 30% of your income going in there without even really knowing it, right? At least at those marginal dollars. That's not even including, entity structure, right? A lot of people that are going out into business on their own are looking at least from an active standpoint, are looking at generating revenue, and they're not thinking about what's known as self-employment taxes. Self-employment taxes usually tack on around 13 to 15% above and beyond what your income tax is. And that's a big conversation that we have with people who are, moving from their first, second into the third, fourth years worth of within the real estate market. And they're starting to build that book of business. They have more revenue, but they're starting to feel like they're getting to take home less dollars, right? And the reason is it's just because nobody's really gone through and explained the math to them of how that works. And then also the backup of that is what options do you have at your disposal? So I would say having a good, clear understanding of like, hey, if I'm in that 30 to 35 to 40%, it seems pretty high, right? Once you get to that point, people are like, well, why am I even in business for myself if this doesn't seem right? Then understanding and having the question of what can I do that would be different, right? And starting to have that conversation, whether it's with your current accountant, reaching out to somebody like Business by Design, or really anybody, just start asking the questions, right? Because I think a lot of people are hesitant to ask about taxes just because nobody wants to talk about taxes in the first place. And then it's also very personal, right? When we start talking about taxes, this is your livelihood, your net worth, but it's worth having the conversation because ultimately you want to have more in your take-home dollars, and it's worth having those conversations, or at least those discussions. So understanding the marginal tax rate, understanding where you're at from an entity structure standpoint is also a good conversation of like, when does it make sense to potentially go file an LLC? What is an LLC? Why would you go and file one? What is an S corporation? What's an LLC tax as an S corporation? There's more things at your disposal, more tools at your disposal that I think a lot of people are even aware of. They feel like oftentimes people will just take kind of the ostrich approach, right? You just put your head in the sand and hope for the best. And I think that there's just better tools out there than kind of what we've had in the past.
I've taken the ostrich approach before.
Yep. And a lot of people do, right?
It'll get done. You'll pay and whatever. But you know what I had to have a realization about was that, and maybe it sounds silly, but trying to pay less taxes is not that's not wrong. I mean, that's just using the tax laws. If you're doing it legally, of course, you're just understanding the tax laws better, which are very complicated. And the more you have somebody who can help you navigate the tax laws, there's things there's things you guys do for us that I are 100% legal and above board that I never would have had any idea you could do.
Yeah.
Like using, for example, using our charging a royalty for the use of our, intellectual property and things like that.
Yeah,
business.
absolutely.
You get a deduction, 100% kosher. It's just,
it's just nobody talks about it.
No.
And royalties is a pretty obscure one, even still, like where I even talk to other accounting firms like, oh, you do that? Like, yep. It's just a matter of understanding the tax law and implementing it in an appropriate fashion, right? And that's another thing too, is I'm on Instagram these days and I'm looking at all these tax gurus, and 90% of it's usually pretty good, but now and then you've got one that's just like, hey, do this idea, like the Augusta rule is an important one that people talk about, like renting yourself your home for 14 days tax-free, right? Sounds great. There's a lot of different things that go into that, right? So like we talk about like Augusta rule, the kids pay, the home office, the royalties, like those have actual agreements behind them. It's not just a matter of, well, I'm going to go do this and then not have any kind of documentation to back it up. That's another major aspect that we focus on, is the compliance standpoint. So I don't want Andy to ever be in a position where he feels like, oh, the IRS is after me, or I've got something that are asking these questions. I feel uncomfortable. I feel like I'm unprepared to answer those questions. We always want to be able to step in and help out with that kind of aspect.
Speaking of documentation, Zach, that brings up a great rollover question, actually. So Adam had a great question here, and this is something I think a lot of realtors deal with when they're getting started is, can you give a basic overview of write-offs as we get into real estate and having new expenses, mileage, etc.? Do we need to have a certain amount to write off before it makes sense for us to track all of this?
That's a really good question. And I think there's a lot of misconception around like, what do I need to keep, right? In case of like the IRS audit, state audit, whatever it is. And you ask 100 different people, you have 100 different answers as far as like what documentation you need to actually have on hand. I'm a firm believer in more is better, right? Of just having that information, because in a sense, you're somewhat guilty until proven innocent with the IRS and with the state. So always being able to have that information on hand is usually beneficial. So, when it comes to like, let's say I'm running, a side business of a lemonade stand and I'm making 10 grand a year and I've got receipts of 5 grand. I want to have that 5 grand of receipts. If I'm making $1.2 million as a top earning real estate agent and I'm paying for my dinners at Cove or Chow Bella or whatever it is, they're $200, $500 a night. Those could be still deductions, but you want to make sure you're keeping track of it. It's all kind of about economies of scale. Just because you're small doesn't necessarily mean that you shouldn't be keeping track of that information. I always say you want to make sure you're never giving the IRS or the state a reason to question something, right? You always want to be on the forefront of having that information readily available. And that's something we go through, is having the conversation about like, what about receipts? What about bank statements? How do I get that stuff in my QuickBooks? Some of those other items as well. And if I can segue quickly into something like QuickBooks. Now, I'm not an advocate here for QuickBooks or anything like that. I'm not pumping up their stock or anything, but it is important to have a way to manage your accounts as well, right? Because if you've got things in a personal account, a business account, a personal credit card, business credit card, it's just very hard and stressful to go through and navigate and put that information together. I'm sure more than one of you have been there burning the midnight oil, trying to get your stuff to your tax guy, and you're scrambling through all these different things. That's just an outdated method of trying to gather information. And QuickBooks, there's different things at hand. We utilize kind of mostly QuickBooks Online, to where we kind of train clients to say like, hey, unless you want us to do your books or you have your own bookkeeper, you need to probably have some way to easily depict your financial health, right? It's kind of a way to check in. It's our lens to see where you're at with your business. If you're like, hey, I made $160,000 last year, because that's not difficult, right? Finding things on a 1099 if your brokerages are still issuing them. But then if you're like, well, I don't really know what my expenses are. Well, if you're at $10,000 worth of expense versus $20,000 or $30,000 worth of expense, that can make a big difference. And I think typically that's one of your first steps in tax planning, is being efficient with your expenses and being aware of what you can take as deductions to offset some of that income. And that's, again, another one of the things that Andy's been trained to go through. Is we've gone through a sample chart of accounts. We go through meals, utilities, auto, travel, all these different topics to make sure that you have that clear understanding of what you can actually pay for with a business credit card or with a business checking account.
Yeah. And it's complicated, and there's gray areas too.
Yeah, absolutely. And that's another good point, is there is no like 10 commandments of like, this is a business deduction and this is not. It's very much a matter of defining what your business purpose is. And I liken, I've got a kind of an example at times where I say, if I were to go up to Paul Miller, the owner of the company, I'd say like, hey, can you pay for my trip to Tahiti? Well, he's going to be like, well, why? Right. In most cases, he's probably going to say no, unless I'm opening the Business by Design Tahitian office or I'm going down there for an educational event. It's probably not going to pay for it. So it is possible. So that's where we have to be creative, right? You don't go just to be like, hey, I'm going down to Miami for 4 weeks because I'm going to go, hang out, sit by the beach, and I'm going to hand out some business cards. It's not really a business deduction, right? So that's another thing where we really want to ensure that all of our clients have just this general base understanding of what they can utilize and take as deductions. And yes, of course, there's going to be one-off conversations where we've got, I've got clients that, are out on Lake Minnetonka or Prior Lake. They're like, hey, I've got a boat that I'm utilizing to show for home showings. Can I take that as a deduction? That's not unreasonable. Now, are we going to be able to take 100% of your $300,000 boat? Probably not, right? So the goal has got to be business purpose. There might be some ways that we can be creative about taking deductions. But again, there's got to be a legitimate business purpose.
Awesome.
We've got a couple other questions here too, but
Yeah.
I noticed Adam put his hand up. Adam, do you want to unmute?
Yeah.
And
Hi guys.
Adam.
Just a quick question on kind of what we're talking about. In order to, and sorry if this is amateur, but in order to write stuff off like our mileage or our bills or whatnot, can you confirm, are we going to need to not take the standard deduction and then itemize our tax return? Is that like
Good
a
question.
criteria? And then, I mean, at what point is it, what's that tipping point for,
Yep.
you know, whether it makes sense or doesn't based on how much scale we're doing in our current business?
It's a very good question, because it can be kind of confusing. A lot of people will be like, hey, I'm a business owner, but I basically just take the standard deduction. I don't need to take these deductions. Those deductions, business deductions, are separate from your personal itemized deductions. And back in 2018 with TCJA, that actually changed this a little bit to where your itemized versus standard deduction kind of comes down to three different things. To state and local taxes. I don't know if anybody has heard of SALT, but there was a big SALT issue. And this is another thing that Andy probably ran into when he was here during some of the changes. But there's a state and local taxes, which are capped at $10,000. So let's say I paid $30,000 worth of state taxes this year. I can only take $10,000 of it. So capped there at 10. You've got your charitable contributions for whatever you do, and then your primary mortgage or your mortgage interest for your homes. So those would be the three things. If those three items are above the standard or standard deduction for this year, you would go through and itemize. Your business deductions are different depending on your entity structure, but I'll keep it simple and say like, hey, you don't have an LLC, you got nothing going on, just a sole proprietorship, right? You're just in business, all your income's getting paid to your personal name. You can take those deductions, right? Mileage, cell phone, advertising, all those different things that would end up on your Schedule C on your personal return. So they're different items. Okay. So I just want to be very clear that, yeah, there's not a matter of like, hey, I've got to make $10,000 in expense before I can actually take those as deductions. No, it's going to be solely on that Schedule C. Now,
Continue.
Yeah, sorry. The only other thing then is losses. I'm not going to get into that conversation today, but if you get to a point where expenses exceed your income, that's a different conversation.
It's not complicated at all, as we can see.
Yeah, and we're barely scratching the tip of the iceberg too. So.
While we mentioned LLCs, Alyssa is wondering
Yes.
at what point is it beneficial to create an LLC? I'm sure that's not the easiest question.
Another kind of, it's another difficult question. I mean, none of the tax questions that we're going to ask are probably all that easy, unless it's like something specific of what's the standard mileage rate for this year. But in all honesty, I would say it depends on a number of factors. One of them is, what's your goal, right? What do you plan on doing for the foreseeable future, right? I had this conversation with a client the other day. They're like, yeah, I want to get going on this new venture that I've got. I'm W-2. I'll probably do this for like a year or two, and then I'm going to be done with it. Well, that doesn't make sense of kind of really going through and getting an entire entity set up and then going through and utilizing something like Business by Design services, because that would be potentially overkill for your scenario, right? If I've got a cold, I'm not going to go to the ER and sit there and overpay for really what I need specifically. So it's usually about like, what's your plan for the future? So I have this conversation quite a bit with newer agents. And they'll say like, hey, I do foresee myself being in this for the next 5 or 10 years. I would suggest getting an LLC and starting to practice with it, right? Getting that LLC, setting up a new business bank account under that business tax identification number and start practicing, right? Just getting in the habit of, yep, this is my business expense and my business income is over here. And this is where my personal income and personal expenses are over here. Really almost think of it as like two separate people. That's the way you want to think of an LLC. Now, an LLC does not necessarily mean, hey, major tax havens, right? That requires kind of a next step where you'd be potentially looking at moving to an S or a C Corp. Not very many people move to a C corporation, but an S corporation has benefits. That's where I would say there's probably a number threshold of about $50,000 to $60,000 worth of profit with an S corporation. Probably means that if you're at that level, and you're making that level of income of profit, I should say a profit, not income, you're probably overpaying your taxes. And more than likely you are. Again, each scenario is a little bit different, but in real estate, for the most part, it's probably worth having discussion of moving to an S corporation. That starts implementing different tax strategies that can help reduce some of the tax that you're exposed to. An LLC does not really do anything for you, except help you establish a separate entity and start establishing a separation between yourself personally and from the business.
Also, I don't want to overstep on you. You know, you're the expert here, but setting up an LLC is not that difficult. Like, it's not costly particularly.
Correct. So there's a couple of different ways to go about it. There's the one where you say like, hey, I'm gonna go do it on my own, right? And it's funny because I'm actually dealing with that right now with a client who had come back to us and they had set up their own entity, and now we've got multiple EINs floating out there. So it's can be relatively easy, right? If I wanted to like go filing with the Secretary of State, right? If I wanted to go and get my certificate of organization, right? I'm just going to go file an LLC, my articles and certificate. I go online, I file it for $155.
Yeah, you can
Pretty
do it
easy.
online.
Pretty easy, but now I've got an LLC, but what am I doing with it? I've got plenty of clients that come to us and be like, yeah, sure, I've got an LLC. I've been using it for years. They have no EIN, they have no bank account, they've got no Minnesota state ID, if applicable. They don't have any like entity documents as far as like an operating agreements, minutes, member control agreements, all the things that you need to do to really demonstrate or illustrate that you are in fact operating as an entity, right? As an LLC or an LLC tax, an S corp, C corp, whatever it may be. You want to make sure you've got that information readily available. That's another one of the things is we work pretty closely here with a law firm called Vertus Law, where we basically kind of step in and say like, hey, don't worry about kind of go getting these things kind of piecemeal together. Let us put it together, have everything established, get it put together. It's kind of like a sunk cost of you're going to be in business, you're going to try to get these things done, and you're going to be utilizing this company for 10, 15, 20 years. You want to make sure it's set up appropriately, right? The last thing you want to have happen is that the IRS comes and says, well, where's your entity documents? Do you have your minutes? And then they void out potentially your legitimacy as an LLC or an S corporation. So again, more of a compliance item, but again, we always want to make sure that our clients are not sitting out there nervous about what the documents they've got.
Yeah, for sure. For sure. Let's see. Is it better to lease or buy? This is from Kim. Kim, are you talking about like
I'm assuming vehicles.
vehicles?
I just want to confirm, are we talking about vehicles?
Yes. Yeah.
Okay. So that's a more specific question to try and answer. Both can have their benefits. And I'm going to go a little bit off on a tangent here, but you'll just bear with me, is leases have an ability to deduct them, right? So if I go and do a lease for 2 years, I can deduct my lease payments and any other kind of actual expenses, right? There's kind of two different things that go into play when it comes to a vehicle deduction. We either take the standard mileage rate, which a lot of real estate agents do, especially if you don't have a larger vehicle, just because you guys are putting on a lot of miles, right? It's not unheard of to put on 20, 30, 40,000 miles within a given year, just because this is part of your job. So a lot of people will end up going with the standard mileage rate, not because it's easier per se, but because usually there's more of a benefit to it. Now you can go the lease route as well, and you could buy or go and purchase a lease. Your lease payments, your vehicle expenses for like gas, oil, maintenance, car wash, insurance, stuff like that, that would all going to be considered kind of like that actual expense, but it's always going to be based on your business use percentage, both of them. So if I drive my vehicle 100% for business, perfect, we're good. If I drive my vehicle 80% for business, I take 80% of my total miles that I drove throughout the course of the year, and I multiply that by the standard mileage rate. That's how I get my standard mileage rate. Say I've got $10,000 of actual expenses, including my lease payments throughout the course of the year. I'm 80% business. I get an $8,000 deduction. So, and that's usually, again, when we talk about tailoring to our clients, I think a lot of that kind of goes overlooked. And that's a matter of, it could be a couple $1,000s a year. And I can't just go back and forth like, hey, I'm SMR this year and I'm actual expense this year. It just requires the proper planning and having those conversations. Because I can't tell you how many times I've had people come in and say like, yeah, I bought a big old truck last year because I was told it's going to be a big business deduction. It can be, as long as you've got the appropriate things in place and you've planned for it. So this is one thing I always tell my clients is, if you're looking at buying a vehicle or leasing a vehicle, always reach out to us first. And I can't tell you how many times I've had people be like, yeah, so I'm at the dealership right now. I forgot that I was supposed to call you. I'm like, hey, that's fine. Just give me the details and we can work through it. So does that help answer your question? I know it's a lot to kind of be thrown out. And I'm not even talking about vehicles over 6,000 pounds and accelerated depreciation. That's a whole different animal.
Yeah, no, I'm just coming up on the end of my lease.
Yep.
And I'm like, do I buy it outright? Do I turn it back in and release or what? So thank you. I appreciate that.
Yeah. And again, it's hard for me to answer that question because would require probably more of a specific conversation to actually look at numbers.
Yeah.
All right, we got another question. Yeah. Andy, you were just going to do this one from
Go ahead, Nora. Go ahead.
As a dual career agent, if I already have an S corp for my non-real estate business, can you just add the real estate revenue to the S corp? or is it better to set up an LLC for the real estate income?
It depends. And again, this is another highly specialized conversation. This would venture more into tax advice. So I'm going to say it with very blanketed terms. Most businesses, especially if they're going to have separate, kind of be treated as separate businesses, and there's going to be separate business income, should be probably formed into separate entities. Now, do I have clients who I had a conversation this morning with somebody who's going to be doing real estate appraisals? They're going to be doing their own 1099 business where they're going to be an S corporation. They also have $10,000 or $5,000 or $10,000 worth of income that they're going to get for styling hair, right? For me, that's not the end rule or end of the world, right? If you got 5 or 10 grand going into your S corporation from doing that hair items, fine. Now, if you're like, I've got two $300,000 businesses that are being all owned and operated, then absolutely. And again, a lot of that comes down to more of a risk assessment than anything, because let's say I've got a $300,000 construction business and I've got a $300,000 real estate business, and everything's lumped into one. Well, if something happens on a job site, everything could potentially be subject to a liability conversation. Now, again, that's now leading more into a legal conversation, and I'm not going to even start to go down that path. Does that help? Is that a nice, vague yet somewhat convincing answer?
Channing said thanks. So
Yeah,
I
that's
agree.
great.
Yes.
Thank you.
So there's a little bit of reading between the lines with taxes as well. So it's each situation's different too, right? So that's why you want to make sure you've got really all the facts at play, and then you kind of draft up a plan and you go from there.
Adam was wondering also, does your company help with tax situations outside of real estate? For example, dual career agents or agents with spouses that work. Yes, you put the whole picture together, personal and business for us. It's not just QuickBooks for the business.
Yep, and I think that's an important distinction is that business by design doesn't necessarily work with just solely like W-2 people. Like, right, if you're going to say like, hey, I only have a 1040, there's not a lot of complexity to it. It's probably just not a fit for business by design. We're more looking for like an involved relationship and helping you plan. Whereas if you got just like a W-2 job, it's pretty simple. And in all honesty, if you want my opinion, I think those should all be probably done by AI at this point. That nobody should be really preparing just simple 1040s, right? If I'm working a W-2 job and I got nothing else on it, there's no reason I should have to go to TurboTax and put that information in. However, I'd say 30 to 40% of our clients are probably in real estate, but that doesn't necessarily mean that's what we only do. I had a conversation with the doctor here earlier this morning as well of potentially a side business, right? We've got clients who have spouses who are only W-2. They have questions of, does it even make sense to have my spouse on as a W-2? Can I bring them into my own business? Can I put them on my own payroll? Again, it's a vast array of questions that come up. We tackle them basically as they come in. So definitely not outside of scope at all.
Yeah.
Go
ahead.
No, go.
Well, I was going to ask just a little bit more about the types of clients that you guys take too. Are you looking for a certain scale of business, or realtors who are brand new and getting started, what? Because I know your business by design is very business focused. Like you said, you're not going to help just the average person who has W-2 income, because they don't
Right.
need that level of service.
They don't need exactly. They don't. It's overkill for what they would need. What they'd be paying. I think the biggest thing is value. Right?
Yeah, exactly.
Understanding value. If you come in here and you're like, hey, I'm going to charge you whatever it is, right? Let's claim it. It's 10 grand for a simple 1040. That doesn't make sense, right? There's no value there, right? Now, if you've got something that's more complicated and there's tax solutions that can be implemented, usually we can implement something to where it's not going to be a cost to you, right? The tax savings should usually go above and beyond what we would have from an actual cost. And again, not even just from a tax perspective, but the breadth of knowledge, the advisors here, the team that you have kind of on your team to really make sure that you've got everything situated. Because again, it's not a transactional relationship. It's not just buying a cup of coffee. And I feel like I've had a couple of clients in the past that it feels like we work for them. It's not the case, right? We're here to assist you in building your business. It's not a matter of like, hey, just file my taxes. If you want to just get your taxes filed, again, business by design is not a fit. And to kind of answer your question about the spectrum, right, or the breadth of who is our ideal client, I'd say our ideal client is somebody who's willing to learn, right, or at least ask questions, or at least know that there's opportunities out there. So it may not be a fit for somebody who is a year one or year two agent. I have had multiple conversations here in just the last few years with somebody just sitting down and helping them understand what is your next steps, or what does the next year or two look like. They may not be a client, but I may be able to draft up a model so that they know that there may be a time, a year or two down the road where it makes sense to reach out to Business by Design, to have that conversation, to make those next steps. So I would say, new agents who are like, hey, I, might be making 10 grand this year. It's probably not a bad idea just to at least have a conversation. We don't charge anything to have those upfront conversations. More for me, it's a matter of like, I don't necessarily need to have the business right now. If it means that in 2 to 3 years, we can somehow be valuable to you and your business, it's worth having the conversation a year or 3 years ahead of time. And then as far as on the larger scale side of things, we're not doing taxes for 3M or Target or anything like that. So we still mostly focus on smaller business. But again, we'll have a conversation with just about anybody about their tax situation. And if it's not a fit, it's not a fit. We just kind of point you in the right direction until potentially it might be in the future.
Yeah, that's great. You guys are amazing.
Thank you.
I have a question or two, but I don't want to, like, if someone else has questions, put your hand, just jump in.
This is a good thing too. I mean, Andy's been with us for 4 or 5 years and he's still got questions, right? That's the point. If you've got questions, you should be able to ask those. And that's one of the things that I've realized as well, is that there's that level of hesitancy to ask those questions because either it may be a dumb question, it may be a personal question, or they just feel that, hopefully this isn't the case anymore, but that they might get charged to call in to ask a question, right? That people still call for or get charged for the minutes that they're talking on a phone is absurd to me, but hopefully that doesn't happen anymore.
Well, I got one that I'm sure we can handle in 2 or 3 minutes.
Yeah.
No, I'm just, so all of us are in real estate. We're making, I think on the call here, who might be listening to this, we're making mostly income that's being taxed. Okay, so when we sell a house, we get paid by the brokerage on a 1099. It's coming in as income, and so on that income we have to pay, relatively speaking, a lot of taxes. What do you see the more successful, bigger realtors who have been at this a while longer doing to reduce their income tax burden? I know investment properties. Is there anything else, or could you explain a little how owning investments or other strategies can help reduce our taxable income? Because as we make more money, we pay a lot more taxes in real estate. If we don't do these.
Yeah, and in all honesty, that's the same in any industry.
Well, yeah.
As you generate more income, you're just going to be at higher tax brackets. And that's why having a conversation with a tax professional is important, because not every year is going to be the same, right? You might have a year, and you're in real estate, that the market changes, right? 2021 was absolutely wild. Things are supposed to cool off now, but people are still turning and burning. So what I would say is, some of that is wholly dependent on kind of where your income is at, right? Because somebody who's making $50,000, maybe it doesn't make sense to go and set up a 401k. Maybe they want to do like a simple or a SEP. Maybe somebody who's making 1.5 is going to go and do like a defined benefit plan. Maybe they've got their own income where they're going to start going and looking at investment properties. Maybe they've got kids that they want to pay through their company, right? There's quite a few different things at your disposal that you can really start to utilize. It just kind of depends on where you're at and what's important to you. Because sometimes people are like, hey, I don't mind paying a little bit more money and just reinvesting into my business and paying a little bit more tax. Some people are really wholly focused on, I want to drive that down as much as possible. If you really want to have zero tax, well, spend all your money. But that's not the point, right? You don't just spend your way to prosperity to get down to zero profit. The goal is to eventually build post-tax net worth. And the other thing is it's a year over year item, right? This is more than likely almost everyone's biggest expense, right? Is coming down here and having a proper plan and just being able to discuss with somebody, what are the different levers you can pull within that given year that are ultimately going to have that total impact. So it's a really vague answer, but that's because it needs to be almost, again, more specified as far as like what you're doing. Because
there are a lot of ways to do it. The tax laws are very complex, and there's a lot of ways, and there's just a lot of ways that you can reduce your taxable income, but you have to have somebody who knows how to navigate that. You can't do it on your own.
Yeah, and I think you raise a good point. It's really just kind of a knowledge transfer. I don't need my clients to know the tax code. Don't go to page 72 of the tax code or anything like that. I just need you to have a working knowledge of certain topics so you can go through those. Like, what is qualified business income deduction? What's the pass-through rent tax credit? What are, passive loss limitations? All these different topics that you should be aware of, at least, with your accountant bringing it up to you, or at least just kind of have a good general working knowledge of them, because they ultimately impact what everybody's looking for, which is post-tax net worth, right? Is taking home as much money out of that business as you possibly can.
Yeah, for sure. Well, any last questions? Otherwise, we could wrap it up.
Okay. I'm open to any general questions.
And if anyone wants to get in touch with Zach, can we share your email and stuff?
Yep. So I think it's in the chat right now. I just finally pulled this up. It's zachprim@mybb.com. So again, today's kind of like blanketing across a myriad of topics. If you ever have questions, if you're like, hey, I think I could be doing something different, more than happy to have a conversation, set something up. Usually on the front end, we talk a little bit about, I kind of have like a 2-step process or a 2-meeting process. Andy's been through this, to where we go through, have a good understanding of kind of where you're at with your current tax model, develop potentially a better one, or at least show you what your options are at hand. And then we discuss pricing and things like that. And that's another thing that comes up all the time. I'll probably nip this in the bud, is, how much do we charge, right? And I usually ask my real estate agents the same question. It's like, well, if somebody comes up to you, like, hey, I want you to sell my house. How much is it going to be? Well, it depends, right? How much work is this? A house on Lake Minnetonka, or am I selling a Rambler down in Ridgefield? Right? There's usually going to be a difference in kind of each person's scenario.
Yeah, for sure. Well, I can just say that I don't think we really pay you anything, because the savings.
I'm glad you said it, because I don't like saying it.
No, I know, but it's true. I mean, honestly, just in the sense of, honestly, I'll just say we pay a few $100s a month, and that would sound like a lot to a lot of people, especially somebody just getting started. But I'm telling you, by the end of the year, with everything that we would be paying if I was trying to figure it out, which I couldn't do anyway.
Yep.
It's it's an investment.
Yeah, and I think that's the best way to put it, is it is an investment. And when you go through and you look at your total tax from the year of last year, and you say, hey, I paid 24 grand in taxes last year. How much is that a month? You're paying $2 grand a month in taxes compared to potentially what our fee is. And oftentimes, especially if you're looking at potentially moving into an S corporation, there's enough meat on the bone to where those fees are basically eaten up, right? To where you say, instead of paying the government, I'm going to go and pay, whether it's business by design or accountant, I push more people to at least just explore all your options. To go and invest into a model, you're really investing in yourself, investing in your business, to make sure that you're not leaving more money on the table year over year over year. Because again, it's not just a Band-Aid approach at the end of the year or when you go and file your taxes. This is planning for, the foreseeable future of you, working through your career, through being an entrepreneur.
Yeah. Yep. Yeah.
Any other questions?
I think that's a great note to leave it on. I love it that if there's one thing I could get from this, it's that it's the whole picture, and talking about taxes with you guys ongoing, as opposed to just waiting until the end of the year and then scramble, go try to figure it out and pay it. That's what should be happening in a real estate business. And when you're getting started early, maybe you don't need that as much, but it'll happen by your second or third year.
Yep, and it's kind of what we see. I mean, we've had enough agents kind of come through business by design where, it's got to be the right fit at the right time, right? And it's just, you don't just get thrown into a big accounting relationship if it's not the right fit for you. But again, that's something you should always be thinking of in the back of your mind, is how do you surround yourself with people that's going to help you ultimately get you to a better end goal.
Well, thank you so much for joining us. This was wonderful, and I hope everyone got some good things out of it.
Yeah, thank you for having me. Hopefully there was some bits of knowledge here.
Good.
All right.
All
Thank
right.
you both. Thank you, everybody.
Thanks, Dan.